Welcome to Bell2Bell podcast, powered by IBN. This original audio production delivers market and sector insights, as well as exclusive interviews with innovative executives shaping the future in fast-moving industries, and may feature a client partner of IBN or one of the 60-plus investor-focused brands within IBN's dynamic brand portfolio. As a multifaceted financial news and publishing company, IBN leverages its extensive distribution network, utilizing multiple proprietary corporate communication tools to introduce both public and private companies to a vast and diverse audience of investors, consumers, influencers, journalists, and other targeted segments of the public. IBN may have received compensation to produce this audio content. Please be sure to read IBN's entire disclaimers for full disclosures. Now sit back, relax, and enjoy the next revelatory episode of IBN's Bell2Bell podcast.
Hi, welcome back. As you know, we're live at the Microcap Conference and we're reviewing companies doing breakthrough and amazing things. And we've actually interviewed this CEO before leading up to the Microcap Conference because Kolibri Global Energy is you know what? I'm going to just introduce CEO Wolf Regener because he's going to give us a mission and a vision on the company. They are here. They've just presented. And here's what investors need to know. Wolf, welcome.
Thank you so much. Appreciate you having us here.
Yeah, excited to hear more, especially just since you've already presented to a number of interested investors. Tell us more about the company's mission and vision and what you were hoping to achieve here at the Microcap Conference.
Here at the Microcap Conference, we're just looking to get more exposure to the company. So we've only been listed on NASDAQ for a little over a year. We were on the TSX before that. So we're trying to get connected to more U.S. investors and showing them the great potential that we have, the growth that the company has had over the last couple of years. And we're forecasting further growth for the year, growing revenue, production, being very efficient at it. We had some big efficiency changes last year. That makes it even better, and let people know that a new reserve report is going to be coming out sometime in March, which hopefully shows a nice increase as well. So just a solid company that we're running. Hopefully everyone sees that.
I'm sure. Just to remind our audience, they are listed. Kolibri Global Energy is listed on the NASDAQ exchange as KGEI and on the TSX as KEI. Now, Wolf, given your 2025 guidance, which projects $75 to $89 million in revenue, and then $58 to $71 million adjusted EBITDA at $70 oil, given the volatility, as we know, oil prices, and the focus on the Tishomingo field, what operational levers can you pull to make sure that you sustain these margins and the prices?
Well, it's all about the wells performing that we have drilled, but we have enough production history that that shouldn't be a big risk. We're drilling new wells, so there's always some variability. We try to be conservative in our forecasts. And just as we're going forward, drilling proved locations, so not taking big risks. We do have one well that we're drilling this year that has a higher risk profile. We have a 46% interest in that, and a large integrated oil company is our partner.
Right.
People can probably figure out who that is. But that reduces some of our risk on the east side that we're drilling in order to prove up even more reserves, because those are not in our reserve report right now. That's another 3,000 acres that we could potentially prove up economically. KEI looks good there. It's just a little bit shallower.
Wonderful. So with the 181-mile lateral locations in the proved drilling inventory, what's the strategic approach to location prioritization?
Really, it's about developing the field in the most efficient manner. So, as I mentioned, most of our wells this year are going to be in the proved category. So it's just we've already proved that we can produce good economic wells in this region, and we're infilling and drilling more wells in the proved area. So that's really what it is. And then we are spending a little bit of money on the higher risk one to add even more reserve potential to the company. And we feel that's, even though it's riskier, it's not that much risk.
Awesome. So how do you balance, between maximizing the near-term cash flow versus preserving the highest quality inventory?
Really, it's about how the field needs to be developed properly. So it just goes into that direction. And it's a combination of just drilling for cash flow, but it has to properly develop the entire field, whether we own it for the end of time or someone else comes in and ends up buying it. You want to see it developed in the right fashion to get the most reserves out in the most economical fashion.
Awesome. Speak to us now about the stock buybacks that were initiated in Q4 of 2024, and then obviously your $15.8 million available on your credit line. Talk to us about capital allocation between the buybacks, debt reduction, accelerating the drilling programs, particularly given the goal of growing the cash flow.
Yeah, it's always a balancing act. Like you said, we want to show some growth,
Right.
and that's what we've shown. With that, you can also see that we have quite a bit of difference between what we expect our adjusted EBITDA to be for the year and what our capital spend is for the year. So we have got a pretty good margin in there where we could do a lot of share buybacks or do other things to return capital to shareholders, and also some capital there that potentially, if we find something that is be accretive for the company, where we can grow further in that direction as well. Although, because our economics are so good compared to our peers and our industry, it makes it a little bit more challenging finding something that's creative to the company.
Understood. Now, the forecast does show that debt and EBITDA fell below 1x. And given the current valuation and the strong balance sheet, what's the view on potential strategic acquisitions to diversify the Tishomingo field?
Just like accidentally touched on that in the last one already, but we just are looking for things that fit in well with the company. So something that has to be accretive, it has to make sense. Can we get more oil in a cheaper fashion by buying something else or something at least at the same numbers in order to grow a little larger? Larger market cap helps out in the industry as a whole for our shareholders. And so we're always on the lookout for something along those lines.
Now, the production guidance represents significant growth. Walk us through the operational strategy to achieve this and then maintain the cost structure.
Really, it's using the same personnel and doing repeatability on our economics, right? We're constantly striving for improvement, and that's what we've shown over the last few years. So our forecasts are actually fairly on the conservative side. Hopefully the next wells perform just like these last ones did. And then hopefully we'll actually outperform what our guidance is. We're on the higher end of the range. We try to make sure that we stay into that range so we're giving good guidance, good growth, and really they're approved locations. So there's no big surprises from our point of view that we should encounter. Just normal oil and gas drilling risks. But our team has done a great job over the years of minimizing those drilling risks. So I expect that to continue.
Excellent. And we'll be keeping an eye on the stock to make sure that we stay up to date with these developments. But Wolf, having just presented to your audience of investors here at the Microcap Conference, what are the three main takeaways you want us to walk away with today?
That we're unique. We have very high, what we call netbacks of how much money we make per barrel of oil we get out of the ground. We have a lot of proved undeveloped reserves that we're going into. We're efficient in what we do, and we don't have a lot of debt, as you mentioned. We've got $30 million of debt, so our adjusted EBITDA is well within terms. And we're looking forward to continuing to execute like we've been executing with our team. I think we've got a great team, and we appreciate all of our shareholders. Want to do the right thing by them.
And we appreciate you taking the time to sit with us here on the Harvest Podcast today, Mr. Wolf Regener. Thank you. We were just speaking, of course, Mr. Wolf Regener, Kolibri Global Energy, again on the NASDAQ as KGEI, but also on TSX as KEI, the ticker. Thank you so much, you guys. Stay tuned for more.
The Bell2Bell podcast is an original content production powered by IBN, a multifaceted financial news and publishing company that delivers next-generation corporate communication solutions. Utilizing proprietary corporate communication tools such as news aggregation and syndication, social communication, and brand awareness techniques, among others, IBN introduces both public and private companies to diverse audiences to enhance reach and recognition. IBN may receive compensation for services and solutions provided to its client partners. You should assume that the owners, officers, and directors of IBN or financial analysts mentioned in this production may hold a position in and may intend to trade the securities in their own accounts. This production is not an offer or recommendation to buy or sell any securities that may be mentioned in this production. The information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured companies carries inherent investment risk. Listeners should review the companies thoroughly with a registered investment advisor or registered stockbroker. This production by IBN is not purported to be a complete study of the featured company or other companies mentioned. Information used in statements of fact have been obtained from featured companies and other sources but not verified nor guaranteed by IBN as to completeness and accuracy. Such information is subject to change without notice. Please see IBN's full disclaimers and disclosures at www.ibn.fm/disclaimer. Music in this episode is by Infraction. For more, visit inaudio.org.